And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, Futures family. Happy Capital Preservation Friday. It is May the 26th. We are always seeking accurate context, keeping risk management in the forefront of our mind and remaining patient in our trading. My name is John Hoagland. Thanks for trusting me with your time. Happy Friday. Happy Capital Preservation Friday. It's a long weekend this weekend. It's Memorial Day. Make sure you say a prayer and thank all those who have put their lives on the line for our freedoms. Remember, freedom isn't free. So what do we have on the docket this morning? Core durable goods out this morning, 0.2% lower than expected. Core PCE numbers for April, they were looking for 4.6, came out 4.7. Personal income and spending, income remains the same at 0.4%. Spending higher at 0.8%. They were looking for 0.4%. We also had retail and wholesale inventories, and at 9 o'clock we are expecting the Michigan sentiment this morning. So as far as the debt ceiling negotiations, both sides have hinted at progress, but we are going to have to wait as the House of Representatives has left for the long weekend. Congress, however, is apparently on notice to come back and vote if there is any kind of resolution to this. So they're, I guess, expected to be back on an hour's notice this weekend if there is any breaks in the negotiations and they come up with an agreement. U.S. equity futures seem to be remaining optimistic in the face of all this uncertainty, perhaps bolstered by NVIDIA and those AI stocks. Crude prices remain overall range-bound after pulling off monthly highs on that speculation that OPEC Plus will not cut production. They meet on June 4th, so we'll have to wait for that information as well. This morning, the VIX is off a little bit. Well, it was a few minutes ago anyways, down a little bit at 1877. It was 1904 yesterday at this time. The dollar index also a little lower than it was yesterday at this time. It's 103.8 last I looked. Yesterday at this time, it was 104. The yield on the 10-year continues to slip to the upside. 3.84 last I checked this morning, where it was 3.75 yesterday morning. Make sure you hit the lucky like button, share, comment, question, feedback, and heckling are always welcome. Make sure you subscribe to our YouTube channel so you can get notification when we do go live. I have to apologize. My internet has been really kind of on and off, really for the past couple of weeks. I had a long conversation with my provider, and they've assured me that the work that they were doing around here is now finished, and I'm fully expecting to be able to at least finish the market prep this morning. I had problems all day yesterday as they were working on the lines, and hopefully again we're gonna be solid moving forward. I've had a lot of issues with that lately. I've got new equipment. I've got everything that I'm doing right. It's the provider that's been causing the problems for me. So again, sorry about the abrupt end to the prep yesterday. Not much I can do about that, but it is a bummer nonetheless. Good morning, everyone. Dude 32 first in the room winning the prize. Brian, good morning. Timothy, Shaw. I hope everybody has a good capital preservation day today and a nice 3-day weekend. Stephen, Good morning, Dan Trader. Good morning, Will. I wish that I knew how these markets were going to respond to all of this information and the lack of information that we're getting today. We just have to set our hypotheses, watch for one of them to come true, and then trade to that hypothesis. We'll take a look at the charts here. We'll see if that helps. Okay, no, we're not predicting anything here. We're just preparing and looking to, again, seek accurate context, right? Dan Trader saying the PCE numbers didn't help anyone looking for a rate cut this year. I would say that that's probably true. Haggle Matters, good morning. Matthew, congratulations. Very happy for you. I was reading what you said here earlier as it was coming out. It reminded me of something. You did this confident, no anger filled, destructive days. There's few things that can frustrate you as much as futures trading, but was something my dad always said was, it doesn't pay to be mad, because it doesn't pay to harbor anger, because the people or the things that you're mad at, and half of them don't know you're mad, the other half don't care. It only affects you, right? And there's a philosopher, Epictetus, that has a quote, and I keep it in my phone and I read it once in a while when I start to get angry, is any person or thing capable of angering you becomes your master. Don't let him do that. And remember, forgiveness isn't for them, it's for you. Don't carry that anger around, right? Let it go. Congratulations again, Matthew. Very happy to hear that. Bill, good morning. Charles, Kevin, good morning. Theo, 2 days in a row. Theo, I feel lucky. Will, George, Lacey says good morning to everybody as well. Chad, good morning. DA, Stephen, Tim, Casey, George, Duque, good morning. John, Capital Preservation Day, absolutely. Nasdaq, Chris, good morning. Jay, Anissa, Vince, my guy, good to see you. Shy T, Henry, Robert, Jason, good to see you this morning. Yes, Dan, to all of our military, absolutely. Thank you for your service. Scott saw and he conquered. Andy Bleed, Caesar, Grounds Hero, good morning. Jason, John, Jeff, Pete, Chad, started using the hull. It speaks well. Nice. Yeah, that's just a little hint, as all of these things really are, of potential change, right? Casey, halfway through step 1 in the 150K. Patience is a virtue, right? Dan Trader, Chad, yes, excellent. Caesar, Varga, good morning. AK, Joe, good morning. Anger is not good for your health. Isn't that the truth, Joe? Great to see you this morning. Great to have you with us always. We're going to jump into the charts here. We've got about 37 minutes, 36 minutes before the equity open, 6 minutes before crude. And we're going to jump in and start with the daily in the S&Ps. Here we go. So we added 23,000 in open interest yesterday. Volume was off just a little bit in New York. Still in the area of balance. We tried to break out to the upside. It was unsuccessful. We're now back in range, back in value, and really centrally located inside this area of previous balance. Overnight, we've got an inside extended trading hour range. This market is looking for new information. We did have some numbers come out this morning, not wildly impactful. It wasn't crazy. The market is a little bit thin. S&Ps are coming into rollover. Many of these markets are. We've got the Treasuries, which will probably switch to September on Monday. We've got gold in rollover. We'll be moving over to the August contract sometime next week and keep you abreast of the volume on that on the market prep here. Anyways, so again, price is now centrally located. I'm finding it interesting that we've got an inside extended trading hour range. What about the overnight session? The overnight session was inside the regular trading hour session. Do we have any overnight inventory? I think we've reconciled that overnight inventory after the 7:30 numbers. We're opening in range. We're opening in value. I'm going to try and stay patient. In the very short term, we're putting in higher highs and higher lows. Inside the range, I'm going to be patient because it tells me that the market is really largely still in balance of where the balance was created yesterday, and that I may find better trade locations as the day goes on. What was the TPO chart like yesterday? Normal variation day, neutral in stance. So what are we looking at on either side of this market? Well, we've got a prominent point of control here. We did not set a island low yesterday. We closed the gap yesterday. So with the market in its current stance, it would make sense to me with no new information for the market to kind of rotate today, perhaps testing to the point of control here and the point of control here. Makes sense to me. It's a bit of potential repair, right? So we have yesterday in repair. We're closing in on repair here. So I'm going to look for a move away from this area because the market has used up a lot of its ability to facilitate trade here. And I would be looking for targets to be the points of control from the two previous days. So up to here, down to here. It would be a larger range today. Not really expecting anything big. The news is out. We're probably, not going to be hearing much from Washington as far as the debt ceiling situation. So we're kind of on hold. Of course, anything can happen. ACH, one of our acronyms here. But I'm going to be, being patient, waiting to trade what I see, looking for opportunities, probably at the extremes as the day goes on, and I'm going to stay patient because opening in range and in value indicates balance, indicates there's little change in the perception of value. It's a little bit different than the Nasdaq. We're going to see that here shortly. Take a look at crude oil, however, as it begins to open its regular trading hour trading day. So yesterday we added 38,000 open interest. The attempted breakout above last week's high was relatively unsuccessful, right? We did add open interest the day before yesterday. Let me double check that. Yeah. So for 3 straight days, we've added open interest on the way up and on the turnaround and on the way down. So we've been adding open interest. I mean, part of that could be just because we've gotten past rollover, but looking at the situation, we're right in the middle of an area of balance. Now that balance is putting up higher lows and higher highs. Keeping that in mind, we're now back down below the weekly kickoff high. We're back below last week's high. Those might be kind of interesting levels to take an execution today because, again, they allow us the opportunity to limit risk. Yesterday's session, we opened above weekly kickoff high. We broke down through it and we spent the rest of the day trying to push to the downside. Overnight, we have long overnight inventory now. The 12.4 million barrel drop in inventory yesterday was bound to come into play at some point. You would figure lower inventory would mean higher pricing, and the opposite has a tendency to happen when it comes to crude oil. So traders are going to be eyeing the June 4th OPEC meeting. Structure to the upside remains in a little bit longer time frame, but in shorter time frame, we've put in a lower low and a lower high. Overnight range inside the range from yesterday. Stay patient. I'm going to be looking for opportunities at known inflection levels. Weekly kickoff high, when we broke above it, became supportive. It was supportive here. Now it may be back to resistance. Resistance, support, back to resistance. It does tend to happen from time to time. Here's the TPO chart. Just opening now. Finishing the opening range. But again, overnight inside yesterday's range, a normal variation, neutral day. Kind of surprising that the market broke yesterday after that EIA, the EIA on Wednesday. So here we are. Where are we? Potential repair. We've got 2 consecutive days, point of control above, point of control below. Stay patient, though. We're inside yesterday's range with little change in the perception of value of a barrel of crude oil. Not all that exciting there today, right? Yesterday, 2-sided auction. Well, 1-sided, 2-sided, normal variation day, somewhat of a 2-sided trade yesterday. Be patient. Be patient. Now for the Nasdaq. The Nasdaq is the shining star of the U.S. equities these days. Volume and open interest increased on this push to the upside. Recent high was in the overnight. Now it's back in the overnight. We added 5,000 in open interest on higher volume. Those AI stocks are running strong right now, right? So giving this auction process a grade, I'm giving it a B minor. We had what we're calling a upside digestion, perhaps even a bull flag. We've broken out above it. We're going to be monitoring for continuation and to the upside. Take a look at the 30-minute chart. We'll see what we're seeing there. So no gap close here. Are we going to open with a gap in the Nasdaq? This is very interesting up here because we knew that our previous recent high was in the overnight. We took that out yesterday. Now we've got a new recent high in the overnight. We'll see if we can take out this high. Again, watch and see. There is the possibility of a gap opening. If we open with a gap, the gap rules will apply. And if we can't close the gap or find support on the close of the gap, we look for opportunities to rally. The reason I'm excited for a gap open in the Nasdaq today is if we do gap open and we close the gap and re-accept inside value from yesterday, that changes things. If we accept, and that is a subjective term, if we accept inside value from yesterday, then the value area special situation play comes in and increases the probability of a pullback down to the value low from yesterday. Dun, dun, dun. The plot thickens. But again, we got to see where we open. If we open with a gap, close the gap, and accept in value, that puts that into play. A couple of rules with that, right? And then, actually assessing that the market has reaccepted inside value is yet another story. So here's the TPO chart from yesterday. Normal variation. I'm going to take the overnight off. Normal variation. The IB low is the extreme low. It was that way in the S&Ps as well. Almost a P-shaped profile, which would indicate short covering, but with the increase in open interest, that short covering met with new buyers as well. Again, that overnight high, recent overnight high looms above. Market doesn't like to leave those for very long. Here's the gold. So we had a kind of a breakout of a short time frame balance area, right? Last week's low was supportive for a couple of days this week. Now we've moved lower, but we lost open interest. We also have to remember that open interest is really blurry right now because we're in rollover. We're probably going to be moving to the August contract at some time early next week. The volume is moving over. And again, I'll let you know when the volume has moved. You're fine trading June today. I think you're probably fine trading the August, but right now the volume is greater in the June contract. Let's see here. 63,000 in August. $90,000 in June. Won't be long. We'll be trading August gold. So we've got a good downside auction. The auction kind of digested here. Now we've got some possible continuation, but that breakout to the downside yesterday again did not impress as far as open interest is concerned. And again, that's blurry. Overall, we lost 8,000 in open interest. So I'm giving this breakout and continuation to the downside a C. I'm not all that impressed with it. Here's the 30-minute chart to give us some kind of context on the day today. Overnight inventory was long. I believe that is now reconciled, and we're currently in value at the point of control. I'm going to be very patient and let the market establish an early range and work the extremes of that range. Yesterday, we had a normal trading day in gold. I don't remember the last time I've seen a normal trading day. In other words, the first hour of the session put the high and the low for the session, and the market just kind of rotated. It's a normal variation, somewhat of an extreme day because the point of control, the TPO point of control, is relatively low. It seems like a B shape, long liquidation, which is supported by the loss in open interest. So it's not like we've had a bunch of new business, new selling coming in down here. This was taking care of old business. Now we're going to see what happens today. Inside range, inside value. We've already kind of tested the value high, tested the value low. Be patient. The market is right in the middle of the day session range, yesterday's range, the overnight range. It's right in the middle. I'm not going to be doing anything here where the juicy, gooey Oreo middle is. Some cookies on the outside. I'll look for those. Here's the euro. I was looking for a big move yesterday that just didn't quite do what I was hoping that it would. We broke out for the day before below weekly kickoff low. Volume and open interest were very disappointing yesterday. We lost volume, and there was virtually no change in open interest. That's the preliminary number, but that tells me that yesterday didn't perform very well. We still have downside structure. We should be seeing an acceleration to the downside, I think technically, but we got to watch that dollar, right? If the dollar starts to fall off, we may get another opportunity for an execution at weekly kickoff high. Take a look at the 30-minute chart here. Well, we had a risk of putting in an island low. That risk is now gone. The market opened with a gap after a gap, but it did close it after the number came out. So now we've finished closing this gap. We closed the gap this morning. Yes, we did. Yep, we closed this gap. So a lot of gap closing going on here. Overnight inventory was long. It may still be somewhat long, but it looks like a lot of that was reconciled on the pullback after the number. Here's the TPO chart. Normal variation. Here's that gap. We can close this off. So a normal variation day yesterday. Whoops, let me make that a little bit easier to see. The IB high, we opened, closed the gap right away. Look where we traded to on the high, the volume point of control. Look where we might trade to on the low, the volume point of control. Be patient. Be patient. Now, for the 10-year, how is it doing? Well, it is in the teeth of rollover. We're going to be switching to the September contract on Monday. Monday, we'll be trading the September 10 years. The downside auction remains intact. I mean, it is obviously almost one time framing lower, and that seems to be continuing. We added 62,000 on the breakout below the weekly kickoff low yesterday. That's encouraging for continuing downside movement. Again, it's a little bit blurry because of rollover. Given this grade, this auction, a B minus right now because it's in rollover. If this was a non-rollover period of time and we added that kind of open interest on a breakout to the downside on higher volume, it would get a higher grade than that. But because it's rollover, I'm a little, it's a little blurry, right? That open interest and volume during rollover. What is a trader to do? So once we broke out below weekly kickoff low yesterday, we tested several times above it and back to it. Now it looks like it is kind of ensconced as resistance above price. 730 numbers come out. This is the market moved lower and added open interest. It is a healthy auction if it were not for rollover. Here's the TPO chart. So we have an excess high. We also have a late spike. The base of this late spike is 112.20 and a half ticks. Where did we open? We opened above it, but we are starting to spend some time below the base of the late spike and below the low of the late spike. We keep spending time down here, that's going to mark acceptance of lower pricing. I don't want the market to spend a lot of time below a late spike when it opens above it. Normal variation trading day yesterday. IB high. Used up a lot of ability to facilitate trade. If we start to see volume and time building lower, that's acceptance. What about the natural gas? Oh, this market. Last week's low is in play today. Volume pretty good yesterday. It's still in rollover. This is the July contract, and that's where we should be now. It's the new front month. Big spike in volume. Lost open interest yesterday, however, on this test to the last week's low. So the market not necessarily bringing business to the downside as getting out of it. Here's the 30. Overnight inventory was short and getting shorter. Last week's low again in play. Weekly kickoff low in play. 235. We've opened with a gap. That's a new development here after the 730 numbers. So gap rules apply. We can't close this gap. We're looking for opportunities to sell strength for a continuation to the downside until proven wrong. Here's the TPO chart. Double distribution trend day. IB neither the high nor the low. Weak low here. Okay, so we're seeing excess above price in an unfinished downside auction that is continuing today so far. So we got to make sure, we're We're not looking for longs until there's a reason to. There's got to be some sort of structure, or we were able to close the gap and then re-accept in range from yesterday and value from yesterday before anything. Alrighty.